Hey guys, Bill Soriano back here. I did want to come back on. It's about 11:08 a.m. Hopefully you've seen the live video I did this morning that showed a lot of trades moving in, a lot of signals going off against the trend, showing that there was reversals coming and a lot of good trades could have been taken. Now, I would be remiss, guys, if I didn't tell you that more than likely the news had a lot to do with these moves. I say that initially it has a lot to do with the moves because as I told you in other videos, the market makers are the ones that really control the market. They have the money, they have enough resources to move the market in any direction they want at will. Now, they don't have unlimited resources and they're not allowed to move the market too much on a daily basis. They can't collapse the economy, obviously, but they have enough resources at their disposal and they have a few tricks at their disposal to move the market in any direction they want. And you might say to me, Bill, why would they want to do this? Well, their job is to make money, and they make their money by taking the money from retail traders like us. And so they're able to see all the orders on the board. They know what positions you have. They know where the open orders are. They know where the stop losses are. They know who's in margin trouble, who's going to lose their whole account. They have all this information. And so wherever they can make the most money, they're going to move the market that way. And they do some tricks too. Like I told you in earlier videos, they may move the market, they may spike the market up in order to get people on board with the trend, to get more people to take long positions. At the same time, they're stopping out the people that are going short, right? And then they change directions and they go back the other way and take all the money that just got in, right? They hit all those people stops or they trap them in certain areas. They know who's in margin trouble. They have access to all this. Anyway, uh, I don't want to go into that, but what I do want to show you is that what they'll do is they will use the news in order to disguise their moves. Okay, so overnight there was a lot of news on the euro, and that's what made a lot of those pairs move, like I showed you in the earlier video. Then this morning, look at all this news on the euro overnight, right? Then this morning there was a ton of news on the dollar, right? Just a ton of news came out on the dollar. Still more coming out even just recently, 10:30 a.m., right? And then there's some Canadian news coming up here shortly. Now, not all of these news events are of high importance, right? As you see here, I'm on this website. I'll put the link in the group here. But, really only the ones that you really have to worry about are the ones that have three bulls. So this is one bull, this is two bulls, right? So these weren't really, you know, high volatility news events. But like I said, the market makers will use this news coming out as an excuse to move the market a certain way, right? Now, as you scroll down here, you see though on the dollar here there were a couple three bull ones here. The core retail sales came out, right? They were obviously down. Um, but so these are have a little more significance with the market movement. But again, it's really the market makers overall that use this news coming out as an excuse to move the market in a certain direction most of the time. Sometimes that's not true. I'm not saying all the time, but most of the time. Anyway, I just wanted to let you see that so you see that that's part of the reason why some of those big moves were made overnight and then into the morning here. But let's just look at a couple of charts here. This is USD JPY. This is right now. And so let me just get back to over here. 1 second here, guys. Yeah, I just want to make sure that you are seeing my screen. Okay. So yeah, just getting back to here. See, I can get this to come off here. Okay. Just getting back to USD JPY. Sorry about that. We see that the trend had been down, right? We had the cross right here. 1, 2, 3, 4. So this is the fifth day. This was the fifth day of a downtrend. So, price could continue down. Uh, we could have still taken more short positions, right? Had they shown themselves. There was just yesterday a signal went off right here. Some people may still been in that trade or whatever if they're using this software. But then what happens here is price makes a sharp move up, you know, and then right here it does go back above the 89-day moving average, right? So it gives a initial signal, right? The first confirmation, we call it, that the trend is about to change maybe. And then it closes above this sell entry right here. But then the very next candle drops right back down. And so you can actually take this sell entry right here. Now I missed it. Now you can see I had an open order in right here. So what happened was when I looked at my laptop here, it had already moved down, about 15 or 16 pips. So I didn't want to get in at that point because I was obviously expecting it to reverse a little bit anyway based on the size of this candle here. But I put a limit order in right here, but it didn't execute. Okay, so this moved down. Right now it's moving back up. But this is a valid entry. This is a valid sell entry because we're still in a downtrend, right? Price did drop back down below the 89-day moving average. The price closed above the sell entry, and then it went right back down below it. So that was a valid sell entry. It didn't get to take profit one yet, but we'll see what happens here. This one here is interesting. This is EUR USD. Like I said, a lot of this was driven by that news, all that news coming out overnight. But again, as you've seen, not any of that news was really of high importance that would have a lot of volatility on the market. This market move was made by the market makers. They wanted to move the market down because it was in their best interest to take as much money as they can from the retail traders. So anyway, if you would have taken, you get a sell entry right here. Again, this particular currency had been up. It'd been in an uptrend 1, 2, 3, 4, 5, 6. This is now the 7th day. So we'd obviously be looking for this to reverse now. Okay, we do get a move down and we get a sell entry right here. Okay, price is down below the 89-day moving average. The faster moving averages are pointing down. We get the sell entry right here. And this makes a quick move down 36 pips, but then it comes right back up. Okay. Now, had you taken that trade, right here, you're going to see this ADR low, ADR high line. So what I did was I put an ADR marker on this chart, and that measures the average daily range for a currency over 14 days. And when the currency makes that move equal to its average daily range, these lines here turn red and they light up. And that tells you right there that this currency is probably not going to move much lower today, okay? Because it's already moved an amount equal to its average daily range. And that average daily range is the range from the top to the bottom. So it actually moved 134 pips today. It looks like its average daily range was somewhere around 115. I don't have it on the chart here. But if you would have taken that trade and it would have moved down like this, you would have wanted to get out of that trade based on these lines turning red right here. If you had this indicator on your chart, which I'll show you how to do that, later on. I'll once we get everything organized, I'll make a template of the chart that I'm using and I'll post it in the group so you can use the same template. Okay, so you would have wanted to get out of that trade even though it didn't make it to 50 pips or take profit one, because when this ADR line turns red, that tells you the average daily range has been met for that day. So it's probably not going to move in the direction it's currently moving much further. So you'd want to take your profit and get out. So I just wanted to show you that so you'd see that. Let's see if there was any other ones I wanted to go back and talk about. I think it was right here, this GBP JPY trade. So right here, this trade gave a signal, right? It was a signal against the trend because the trend had been up, but we're looking for the trend to change, right? Today, we're looking for the reversal, right? If we look back, the trend had been up here, 1, 2, 3, 4, 5, 6, 7. This is the 8th day now. So that tells us if we get a buy entry, we probably shouldn't take it, right? We wouldn't have wanted to take that buy entry there, right? It was at the wrong time of day anyway, so we wouldn't have taken it, even if it was valid. But now we want to look for sales. So, right, boom, the market moves down again, maybe because of the news, maybe because of the market makers, who knows, right? It moves down and you get to take profit one and you get out, right? Look what happens on this 1 hour candle right here. It goes all the way back to break even. In 1 hour, it erases 6 hours worth of move base, five to 6 hours worth of move. It goes all the way back to break even. Okay. And then it starts going down again. So we'll see where it goes from here. Now, had this candle right here, or had this currency closed back up above the sell entry and then came back down here, we could have taken that trade again. We could have taken that trade again, or for the first time if we didn't take the first one, right? But since it didn't close back up above, I don't consider that a valid signal there. So we'll have to wait and see what happens there. But yeah, for right now, you wouldn't want to get back into that trade. Just scrolling through here. Again, this one gave us a sell entry right here. We got in it. It moved down a little bit, but then it started to reverse back up. So we'll have to wait and see what happens there. You know, you'd expect a little bit of a pullback or a correction after this move down here, because during the day here it moved down 198 pips. So you have to expect that it would move back a little bit. Okay. Hopefully it doesn't get all the way back up to here and stop us out. And then it'll just, at some point it stops and just continues on the way back down here. So we'll keep an eye on that, but I wanted to come on. I wanted to talk a little bit about the news, how the market makers are sometimes use those upcoming news events as an excuse to move the market a certain way, right? So I wanted to talk about that, and I wanted to show you, a couple things that I'm looking at right now. So again, if something comes up, I'll come back on. If not, I'll see you guys about 8 o'clock Eastern time tonight.